G'day traders, 1 minute mindset reset. Today we're talking about impulse is your enemy and patience is your friend. So today we saw gold have a huge meltdown and complete a 3-day cycle, but also we had a break of the high of the year. We talked about this in the video over the Christmas break about the importance of understanding the opening range of the year. And the parabolic first red day setup today completed that pattern. I have no idea what it will do coming forward, but one of the reasons why I say do not counter trend on certain trade setups is that in the past, part of me putting that playbook together has come through a lot of painful lessons. Today's a classic example of that. We saw gold melt down, and a lot of traders did not get into that first bounce or the first bar break, and when that happens, often they feel like they need to try and counter trend or buy the low, expecting a move back up through the lower highs of the day. And of course, as I said, in that type of situation, it's Friday non-farm payrolls, beginning of a new month, and not only did we take out the high of the year, so high of the year, low of the week. We talked about this in the break, but the 1,000 pip 3 weeks of rise, and then the break-in structure on Tuesday. That break-in structure is the beginning of the pump. The Fed was the pump up through the high on day 2. We had the collapse yesterday and the consolidation under first red day today. So in the past, we get days like this and traders feel compelled to keep trading because of the volatility that's present. And I emphasize the importance of taking 1 or 2 best trade setups, locking in the money, and then walking away, and then understanding how to have an actionable review process to understand how maybe you could have made more on a sizable setup if you took a losing trade. You know, when I say to you don't counter trend, that comes from a lot of experience of having made a lot of money and kept trading and counter trending an all-in day and blowing out an account more than once on different markets, oil, gold, indexes. So you don't want to play with fire. The whole idea is to lock in the money, put it in your account, come back the next day and hunt another best trade setup. Fear will keep you out of getting into a winning trade. Greed will keep you holding on to a losing trade, or not locking in profits, holding on for more, getting back in and over trading, over leveraging, get even trading, all those things. The more you trade, the more you're likely to go into tilt and engage in impulsive or irrational behavior. Impulse is your enemy. Time is your friend. So study this weekend. Go back. If you took some losing trades, understand why they didn't pan out the way you expected. I talk about front side, back side. Gold this week is a textbook perfect example of an absolutely perfect 1, 2, 3 to the high, a break in structure, collapse, consolidation first red day, and a blow off move, coupled with timing cycles, other time frame traders, the whole package, sizing in and taking the money and running. So congratulations to the traders who nailed it this week, because as some traders grew their account 50 and 100% in 1 week just by sitting and waiting. That trade game was over less than half an hour, 45 minutes. A few trailers sitting in there, but peanuts. The bulk of it's out of the market and in my bank account. So focus on where you can improve. If you've been doing things well, build on those strengths. 1% better every single day. If you made a mistake, don't beat yourself up. I've made more mistakes than probably all of you combined, which is why when I tell you certain things, it's come from school of hard knocks experience. So focus on the simple stuff, focus on what you do well, focus on the easy money, and may the markets go with you. Traders, have a great weekend.